Ladies and gentlemen, good day and welcome to Q2 FY2024 earnings conference call of HG Infra Engineering Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you.
Thank you, Yashasvi. Good afternoon, everybody, and welcome to HG Infra Engineering Limited earnings call to discuss the Q2 and H1 FY24 results. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Yeah, thank you, Sana. So good afternoon, ladies and gentlemen. A very warm welcome to the H1 FY24 and Q2 FY24 earnings conference call of HG Infra Engineering Limited. We welcome you all here to share the highlights of our quarterly and half-yearly performance, achievements, and our vision for the future. I hope all of you have had the opportunity to review the investors' presentation and financial results which have been made available on the exchange. As we all know that NHAI tendering has been in the slow lane till September 23, the major reason behind lagging in numbers is because of the prolonged and uncertain monsoon across the country, that is for the execution as well. It has now recently picked up due to certain changes in the bidding process and internal conditioning of the department. Next 4-5 months will be vital for the sector due to upcoming central and state elections as known to each one of us. We are working on our strategy for priorities to overcome these challenges, and we are optimistic that bidding will definitely accelerate in coming months. Let me share some thoughts on the opportunities in other sectors as we wish to diversify our order in all other mentioned sectors. In railway sector, PM Narendra Modi ji on August 6, 2023 launched Atma Bharat Railway Station Scheme to transform and revitalize 1,309 railway stations across the nation. It aims to transform railway stations into modern, well-equipped hubs. We have already bidded 2 tenders amounting rupees 1,000 crore, and we are working on 3 new tenders about rupees 1,200 crore in this scheme for the financial year FY2023-24. We have also bidded 14 projects costing 6,500 crore on various authorities like Indian Railways, RVNL, etc. in railway sector. The results of these bidded projects are yet awaited. In this financial year, we are planning to bid about 15 more bids of rupees 8,000 crore in these sectors. In metro sector, we are eligible to bid for elevated metro and RRTS project that includes orbital railway as well, and started bidding for various metro projects. We are also exploring possibility to bid underground metro rail project in association with other organizations. This sector remains in our focus in upcoming months. Awarding in water sector was quite slow during 6 months because of the state elections in few of the states. We are expecting momentum in this segment in coming months. I would like to assure our shareholders, all the financial partners and other stakeholders that company is prudent and vigilant to ramp up the growth story and persistent to grab the upcoming opportunities in the near future. Let me start the journey of this quarter and give you the glimpse of operational highlights first. For quarter ended September 2023, our order books stand at rupees 10,678 crore, which have established our presence across 11 states, with the EPC segment comprising 51% of our entire projects and HAM segment constituting the remaining 49%. Now, the updates on the ongoing projects of EPC. The execution progress on various EPC projects is as follows. The Ganga Expressway project has achieved approximately 29.3% completion. The project is running well in the time as per the contractual timelines. In Delhi UER projects, we are around 78.8%. That is the financial progress and expected to get complete in December 23. The Nelamangala-Tumkur project of NHAI is progressing well and has reached an execution 6%. The progress on various HAM projects is also running as per the planned schedule. The update is that all three Raipur-Visakhapatnam packages of Odisha, OD5 and 6 and Andhra AP1 are progressing well, and we are around 50% completion in these projects, and we would be completing 2 out of these 3 projects before Q1 FY23, that is by June 24. In Khammam-Devarapalle project, package 1, we have achieved 21.9% completion. It has reached up to 28.1% completion. In case of Rewari bypass, we have received PCOD dated 25th May 2023. That was on 9th of 2023. This project will be monetized in the second tranche. For our new Karnal Ring Road HAM project, financial closure has been declared on 29th August 23, and we have received the appointed date of Karnal on 31st August 23. Till now, we have executed 5.3% of the work in this project. As you know, we have set our footprints in current order book with diversification into railways and metro. I would like to touch upon the progress of these projects as well. We have completed 26.6% of DMRC metro project. Execution of this project is going well on track as per the contract timelines. We have received appointed date of Arvinel's rail project on 24th May 2023. Now post rainy season, the project is progressing well as per the scheduled timelines. The LOA of Kanpur railway station project has been received on June 2023, and very recently the appointed date is also declared. The source and machine mobilization in this project is already completed, and the progress is going to be very well in this quarter as well as in last quarter of this year. Let me now share other significant updates for H1 FY24. The PCOD of Mancherial project received on 26 July 23. That was with effect from 30th December 2022. For Varanasi-Ranchi Kolkata package 10 and 13, final sanction from lenders like HDFC and Axis has been received, and the documents for the financial closure will be submitted to NHAI in this month. Coming to the financial highlights of this quarter, at the standalone level, our overall revenue in H1 FY24 was 2,140.8 crore. That is an increase of 17.8% year-on-year compared to rupees 1,817.7 crore in H2 FY23. EBITDA stood at rupees 343.2 crore in H1 FY24, resulting in the EBITDA margin at around 16% as compared to rupees 283.2 crore at 15.6% margin in H1 FY23. PAT in H1 FY24 was at rupees 180 crore with 8.4% profit margin as compared to rupees 162.3 crore at 8.9% margin at H1 FY23. In Q2 FY24, the standalone revenue reached at rupees 869.5 crore, indicating a notable 15.6% year-on-year growth from rupees 752.1 crore recorded in Q2 FY23. The standalone EBITDA for Q2 FY24 was rupees 138.4 crores, reflecting a year-on-year growth of 14.6%. The PAT margin for Q2 FY24 stood at rupees 61.7 crore and 7.1% as compared to 64.6 crore, that was 8.6% last year. Regarding the company's debt position on a standalone basis, the gross debt amounting to rupees 597.3 crore, which includes the working capital debt of rupees 157.1 crore, term loan and current maturities, along with the trade limit totaling rupees 359.4 crore, and NCD of rupees 80.8 crore. The increase in debt in this quarter was due to excess utilization of working capital limits on account of less execution at projects and due to prolonged and erratic monsoon conditions. Earlier, the company has mobilized all the resources as per the planning of the execution at all the projects. However, we are optimistic to reduce the debt in the coming quarters with improved receivables. Moving on to the consolidated numbers, the revenue of H1 FY24 surged to rupees 2,305.7 crore, an increase of 21.2% year-on-year compared to rupees 1,901.6 crore in H2 FY23. EBITDA stood at rupees 500.9 crore, resulting in EBITDA margin of 21.7% growth as compared to rupees 360.1 crore and 18.9% margin at H1 FY23. PAT in H1 FY24 was rupees 246.5 crore, which 10.7% profit margin, as compared to 191.4 crore at 10.1% margin in H1 FY23. During Q2 FY24, the consolidated revenue surged to rupees 954.5 crore, marking a 20% year-on-year growth compared to rupees 795.7 crore recorded in Q2 FY23. At the consolidated level, the EBITDA for Q2 FY24 was rupees 222 crore, displaying a robust year-on-year growth rate of 36.7%. The PAT margin for Q2 FY24 consolidated stood at 10.1%, resulting in a PAT of rupees 96.1 crore compared to 81.8 crore in Q2 FY23. This represents a significant growth of 17.3% in PAT on a year-on-year basis. Regarding the company's debt position at the consolidated level, the gross debt amounting to 2,029.2 crore rupees, that was on 30th September 2023. The total equity requirement for the 12 HAM projects is rupees 1,606.2 crore as on FY26, that was the next 3 years. As of September 23, rupees 777.7 crore has already been infused, and there is a projection of infusion for the year at 395.3 crores. Progress update on the monetization of 4 assets. So during the last quarter, we have signed share purchase agreement with Highway Infrastructure Trust backed by KKR for sale of 4 HAM projects. This is certainly one of the most coveted transactions for us. For first tranche of existing 3 SPVs, we have received all NHAI and lenders' approval for change of control. We have completed and submitted all the condition precedents required for the successful closure of this first tranche. We are expecting to close the transaction during the month of November 23. Before I end my speech, let me assure you that we will achieve our expected numbers with 20% plus upside in the revenue that will bring momentum in the order inflow, with new projects in the tune of 5,000 to 6,000 crores to be added this year, considerably from road and other diversified sectors. We have started preparatory works of analyzing and costing other bidding elements and undergoing preliminary discussions with various clients in solar and metro sector to propel our way forward. We are working minutely in our operational efficiency and executional capabilities to add every penny in our EBITDA and PAT margin. Digital transformation remains on our priority card, from automation in our plant and machinery, operations and other verticals, which will add a lot of value in our financial indicators with seamless and transparent real-time working environment. That's all from my side. We can now open the floor for the question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, first on the order inflow. So, in your opening remarks, you have talked about 5,000 to 6,000 crore order inflow versus originally when we started the year, we were looking at 9,000 odd crore kind of inflow. So, just trying to understand why we are having a low confidence, and also is there a possibility this 5,000 to 6,000 crore may further reduce to 3,000 to 4,000 crore for this year? And at the same time, also, if you can repeat the value of projects that you have bidded, that would be helpful.
Yeah, sure. I think the order inflow, which say almost 7 months completed, so now we are having 5 months during the year. So definitely it was a very slow pace, which never has been the historical past at NHAI. But because of some consolidation, some kind of a project appraisal, now the things are moving very fast as they have indicated. And as in 2047, this Gati Shakti and every scheme is giving a very promising note of highway and awarding. We believe that not 6,000, but at least if 3,000 plus kilometers being awarded and about this 2,000 to 2,500 kilometers in next 4 months. Out of that, we expect that definitely we have lowered our number by this number, which should be bare minimum for the year. And we are hoping that it can be 8,000, but we are keeping it a low level, about 6,000. This is one part of NHA, and the second is MSRDC, where the RSQ results has been delayed. We expect that they are going to be awarded by January, February. Earlier it was almost October, November. But then again, there are also almost 45,000 odd crores of project to be awarded. We expect from them as well. Apart from this diversified sector, as we have already started bidding and evaluation in metro and which can be underground, we have bidded for railway projects around 6,500 crores. We have already done with 2 railway station bidded. So we are looking into 8,000 crores of railway bids and RVNL, which are upcoming in the upcoming months. So that is how we have certain bids already done, but this awarding, the results are not yet declared. So with that, we are keeping about 5,000 to 6,000 crores, which for this particular year with only 4-5 months balance.
Okay, got it. So, 2 aspects. First, whatever, let's say, we get the lower order inflow this year, are you confident to compensate for the next year? So, on a broader sense, how much one can look at in terms of the order inflow for FY25?
Yeah, for sure. I think whatever is would be the shortfall for the year, we will try to compensate for the next year as well. But only because of few, let's say 5 odd states going into election this year and then looking into this central election in next May. So by that time, we would be in a position that entire thing would be consolidated, and in the Q2 onwards for next year, we expect that we would be adding not less than 10 to 12,000 odd crores, which is a deficit of this particular year being added next year.
Okay, great. And in terms of the revenue also, now we are looking at 20% growth this year versus 25%. So that is in terms of that will get compensated in the next year, because broadly in annual report we have talked about 10,000 crore revenue by FY27. So that is a kind of a 23% CAGR. So on a sustainable basis, can that be achievable?
So we talked about annual report. In the annual report, we talked about that by next 5 years, we were looking to take this revenue to 10,000. To be very specific, it's roughly covering about 7 to 18%. Let me be clear on that. So one thing is that for this year, we were looking at about 5,400 crores, and this is roughly 21-22%. We are almost on track, because we have done about 17% year on year done, and we believe that always later half of the year is very good for our kind of infrastructure, where highway and all monsoon activities or festival activities doesn't hamper in our progress. So with that, Q3 and Q4, we expect that we will be touching upon the same number, some 20% to 21%.
Okay, and in terms of the breakup of the revenue segment-wise, what last time we have talked about, 1,800 crore from HAM and 850 crore from EPC, Ganga Expressway 2,000 crore, and the new HAM, all this. So that more or less remains the same, marginal decline across all the 4-5 segments.
Yeah, almost all the same. Even like Ganga Expressway, we initially has projected the 2,100 crore rupees would be for the year, 2,200. So again, in the remaining part of 6 months, we are looking at 1,350 crores coming from Ganga Expressway, and all 6 HAM projects. So all 6 HAM projects would be giving about 1,250 odd crore rupees. So major chunk is coming from these, Orissa, Andhra, and Khammam, Devarapalli, and Karnal. Appointed date already is with us. And then metro and other sectors like railway, we would be adding, this 250 odd crore rupees to be done. Tumkur EPC, then one NTPC small project is there. This is about 150 odd crore rupees value. So these are all, and UER would be completed, and Mancherial, Rewari, the balance small work portion which is going on would be completed. Say few work of Maharashtra, both projects we were going on, but small part that would be completed. We are not looking at the appointed date of Jharkhand package 13, which we expect that by January, February, but we have not counted that progress in the year. So roughly the total number is coming as the same which we have projected earlier.
And the appointed date for package 13 and the package 10 is now when we are expecting?
Package 13 we are expecting by January they would be giving this appointed date, and package 10 would be delayed by another 2 months. By say April we are expecting, because there are few forest permissions which yet not obtained.
Okay, and lastly, couple of data points on the equity breakup to be invested in 24, 25, 26, and retention money, mobilization, advance, unbilled revenue as on September.
For the year, we have kept 395 crore rupees to be invested. For the next year, it would be 270 crore rupees and only 163 crore rupees balance for FY26 for the projects which we are operating on HAM basis. So this is one part. You are asked about the mobilization advance. The mobilization advance is including the material advance. This is 335 crore rupees. So what else you want?
Unbilled revenue and retention money.
Unbilled revenue is about 755 crore rupees, and debtor, including retention, is 172 crore rupees, and debtor is 550 crore rupees.
Okay, and the date you mentioned, other capex actually has increased 129 odd crore, and we were looking at 100 crore. So for full year, how much now we can look at the capex, and the date we have mentioned that we will be reducing. So previously we have talked about 425, 450 crore. So what's the new number?
So that in any case would be in the same range, about 425 to 450 crore rupees. So whatever repayment is going to be there for the second half of the year is very high. And you can see, because we already paid one tranche of NCD, and the second tranche will be paid by March or December. So looking into that, whatever capex which was supposed to be done for all these projects has been done. Hardly there is any capex which is to be done for the year, balance part portion of the year. So hardly 20-25 crore rupees. So it's the major part going into capital work in progress is related to shutters, say for metro, for RVNL, for Kanpur railway station, and even for Raipur Visakhapatnam, where the elevated portion was being constructed. So there, I think of 40 odd crore rupees being invested into shutters and cranes and launchers.
Okay, thank you, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. Participants are requested to press star and 1 to ask a question. We'll take our next question from the line of Mangesh Padam from Centrum Broking. Please go ahead.
Hello, sir. Sir, my question is regarding the monetization. I think we are looking to sell or transfer 4 HAM assets to the InvIT. Out of that, we have received the approvals for 3. So just wanted to understand, would we go ahead with the transfer of these 3 assets first, or will wait for the 4th one? And what are the timelines for actual cash flow to come from this?
See, these are 4 projects which we have already entered and signed the SPA with KKR. This is in this particular 3 projects which we already got the PCOD and COD, they are the ones who are going to be transferred first, where the entire NOC are in place. So everything has been done. We are expecting that the fund would be coming in our account within this month only. And the 4th one, where the PCOD which we got on 25th of May, say post 25th of November, we would be applying 6 months down. We would be applying to NHI and lenders for the further NOC proposals. And by the end of this year, we expect that the amount for that particular 4th project also would be transacted in our account.
Okay, sir. Thank you, sir.
Thank you.
Thank you. We have a next question from the line of Vinit Prasad from Investec. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, I have a couple of questions. One is, what have been the reasons for increase in unbilled WIP? If we look at last 2 years or 24 odd months, consistently that number has increased. It was closer to 250, 270 crores at the end of 21, and gradually it has shot up to almost 730, 740 crores. So what have been the reasons for the change, number one? And number two, sir, what gives you confidence that NHAI ordering will pick up significantly? Is it a case that the pipeline is extremely healthy? If that is the case, how much worth of projects are under the pipeline as of now?
Mr. Vinit, may I request you to mute your line, please? There's background disturbance. Thank you.
Sure. Thanks.
Go ahead.
Your first question was regarding this unbilled revenue, which has now gone up very high. Say earlier in 2 years back, it was about 200 crore rupees. So very significant reason for this is, so one part is in this Ganga Expressway projects, we were having the milestone payment, which were not actually where what is the physical progress and the financial progress. So physical progress in this particular project is always 2 to 3% gap into that. The number is 4,400 crore rupees. Out of 4,400 crore rupees, 150 odd crore rupees always 150 to 200 crore rupees always lying unbilled. But definitely it's a matter of only every month we complete one milestone and then this portion being released. But this is a continuity of that unbilled which has been significantly gone high. But definitely in NHA projects because in UER we have gone through because all structure related projects. There again some milestone payments are not giving us. SPV again some portion has gone very high. Because we have started execution in many of the projects, we have started execution, but then again we are not targeting and getting the certification from SPV even. And this is how, but it's a very time gap arrangement. This is going to be stable somewhere around 500 crore rupees by Q3 because in the many of the projects, old projects, NHI and more projects where certain receivables are unbilled, where the consolidation and certain claims were actually being claimed unbilled, but they are likely to be released in Q3 and Q4. By Q4, we expect it will be in a range of about 500 crore rupees, not beyond that. And the second question was NHI. NHI is definitely having a strong bidding pipeline, which at the end of this financial year, in March 23, they were having almost 60,000 odd crores of project at that point of a time to be awarded. And then could not be awarded because of certain reasons. Now, those 60 and another 40 or 45 crore rupees, 45,000 crores of orders, they are expecting to award by the end of this year as they have guided. And we are expecting that definitely around 2,500 to 3,000 odd kilometers we are already on the bidding pipeline, they would be all awarded.
Understood. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So my first question would be on the monetization. So, sir, in terms of the proceeds, so what could be, in terms of value we are expecting the proceeds from the first 3 projects and the last project in total, sir?
The first one is 405 crore rupees for all 3 HAM projects. The remaining portion would be in the Rewari bypass, that is the 4th project. That is 531 minus 405, roughly about 127 crore rupees.
So the equity which we have invested as mentioned in the presentation, that will not change, right, sir?
So obviously, 343 crore rupees, to be very specific, was the original number. That remains the same.
Okay. And sir, on the debtors, can you give the breakup between the SPV debtors and Ganga Expressway?
Yeah, of course. This unbilled we have already explained that in Ganga Expressway there is 150 crore rupees in Adani Ganga Expressway unbilled. NHA is about 180 crore rupees. SPVs are 270 crore rupees. And railway and metro, they are 58 crore rupees. And others about what I have already done that explained about it, that we are having certain ministry projects, ministry funded projects and certain NHA conservation projects which are 115 crore rupees into that. So they all would be stable, and the debtors and retention altogether is 721 crore rupees. So out of major portion is definitely Ganga Expressway. NHA is 145 crore rupees, SPV is 225 crore rupees, and others stood at about 133 crore. Adani's Ganga Expressway project is 220 crore rupees, which we have received, and every month we are getting the payment. It's not that it's being struck for, say, longer period. So within 45 days we are getting the payment, but due to higher range of execution, this is the figure.
And sir, the PCOD date which you mentioned for Mancherial was which date, sir? December something you said, sir, right?
This was 30th December 2022, but the letter we received very recently.
30th December 2022. Okay. This letter is issued now. Okay. And sir, in terms of your revenue guidance, probably this year you have said almost 5,400 is achievable, plus or minus here and there. But what about 25 and 26? Because sir, now what we see is the inflow guidance is coming down. So we'll have to catch up on the inflow in the first quarter or first half of FY25. So what kind of revenue growth have we seen in 25 now?
The projects which we are already operating, except for Kanpur railway station or even RV and LC, most of the projects are going to be completed next year, say FY25, if you see. So the order backlog is 10,600, and if we are going to execute some 400 crores during the year, later part of the year. So with that, almost the balance would be in the range of 7,500 or say even more than that. So probably 8,000. So with that 7,500, and if order we are looking to add 5,000 to 6,000, so the number would be coming almost the same as we started this year. So with that, the orders which we are having that execution where Orissa, Andhra, all SPVs except for Karnal and Ganga Expressway even, they all would be completed in FY25. So that way I think 6,000 crores is going to be executed, or rather 5,500 plus crores going to be executed in these from this portion only.
That is, you expect 5,500 crore revenue from the existing order backlog, what I understand.
So it's a matter of only getting new orders in the tune of 12,000 crore rupees. That is where if we restrict ourselves to 5,000 to 6,000 this year. So
basically 6,000 is upper end. Okay.
Right.
Okay, sir. That's it from my side. Thank you and all the best, and wish you happy Diwali to you and your team, sir. Thanks a lot.
Thank you. We have our next question from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah, so just to reiterate, our revenue guidance would be around 5,400 crores for FY24.
Yeah.
And what would be our margin guidance for the year?
The margin roughly would be the same. As you have seen that in this monsoon months also we could maintain the same margin. That would be roughly the same, 15.5 to 16%.
Okay, and sir, you mentioned about some claims in the unbilled portion. So what are those claims related to?
So basically, they are not those kind of a claim. The claims we actually quantify or take into our accounts only those claims which are legitimate COS variations and some kind of. We do not take those opportunity claims, time overrun, idling costs into our account. We always take take those things very separately. So these are very small, almost 12 projects we completed right from 2016 to 20. So those are the projects where some kind of a pending, say, variations, approval, and so those are this is the amount coming from those 10 to 12 projects.
And what could be the amount?
This is 115 crore rupees.
Okay. And sir, was there any reduction in scope in any orders during the second quarter?
No, there's no reduction as such.
Okay, because when we reduce take the difference of the order backlogs, we can't reach the revenue. There is some gap of 50-60 crore.
There is 50 to 60 crore rupees of gap, where because in few of the Maharashtra projects, 3 projects were there, where the supplementary agreement was executed for the balance portion of the work, where the land was not handed over to us in 20 when the completion was given. But then now, if supplementary agreement being likely to be exhausted, so they have reduced that number into the supplement from the supplementary agreement. This is 100 crore rupees. So this is a shortfall, I think.
So the backlog for Maharashtra and Rajasthan would be what amount as of September?
Today, I think if you see from backlog from Maharashtra and Rajasthan, it's roughly about 72 crore rupees.
Okay. Thank you, sir.
Thank you. We have our next question from the line of Ash Shah from Elara Capital. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So I had 2 questions. The first one with the recent construction ban in Delhi NCR, and we have 2 main projects out there, one in the metro segment and one the UER one. So are we going to see any? Are these projects going to be affected in any manner for this quarter or something, if possible?
I think these, because they are the projects where this is very high priority. PM office is monitoring these projects, linear projects. Rather, I'm talking of especially UER. As of yesterday, as well, we were discussing that a special permission is going to be given for at least for this particular project, UER. And metro, of course, they are looking at some waiver, because in these projects hardly there is any pollution. As they have guided that the pollution department is going to give us a special relaxation for these projects.
Okay. And second one would be, do we have any arbitration claims against NHA or any other government body? If you could provide some color on that.
No, we don't have any, big claim. It was a very small claim with Agra Development Authority, just 10 crore rupees. Out of that, we have already provided 6 crore rupees out of our unbilled. So, and in the Constellation also, we are running with, Constellation is going for 4 projects of NHI, old projects. In 2018, we completed those projects. But there is very small amount, with hardly it's 22 crore rupees, all 4 projects. In Maharashtra also, it's only a matter of small amount of Constellation being done for certain COS.
Also, could you provide the revenue breakup segment-wise, roads, metros, and railways for Q2 FY24, if possible?
Yeah, you are asking for Q2 what we have done?
Yeah, the revenue breakup.
Revenue, you see, the Ganga Expressway, Mancherial, which is Adani project, we did 290 crore rupees. In NHI EPC, it was 188, and SPVs, it is 303 crore rupees on a very, broad line. A metro on the railway is almost 52 crore rupees.
Okay, that's all from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Uttam Kumar Shrimal from Axis Securities. Please go ahead.
Yes, sir. Good afternoon, and thanks for the opportunity. Sir, you have bid for a few railway projects. So what kind of margin profile will be there in this project, if awarded?
In railway projects, we are keeping our margin for at the bidding level at about, 14%.
Around 14%?
Yeah.
Okay. And sir, how is the competitive intensity currently in both HAM and EPC? If you can elaborate on that.
The competition, definitely, as we have seen last year, this year not many bids have been called and opened, but definitely in HAM it is a bit easier. EPC is very, very aggressive. And, but then again, I think 20 to 25 odd bidders are normally being seen in EPC. In HAM it is coming around 7 to 10 bidders.
Okay. And sir, in case of water projects, you are also expecting margin profile in the range of 14 to 15%?
Sorry?
Water projects, in case of water projects?
Definitely. Sure. We are keeping our margins for these diversified sectoral projects. It can be water, metro on there, about say 12 to 15% range.
And all these diversification projects, how much this will constitute in terms of revenue? Because currently, I think it's around 80% is coming from road, over 90%. So this diversified sector will constitute at least 20-25% of revenue moving ahead?
See, for the year, we are keeping that at least 10% of the total turnover would be coming from these metro and railway projects, which we already have started, 3 projects. And by the 2 years down the line, rather in 25-26, we are looking at about 20% of the total order execution would be from this sector. And by that year, 26, we are looking at about 25% order backlog should be from this sector, other than roads.
Okay. And sir, depreciation has increased in this quarter. So what is the reason, and this run rate will continue for the whole year?
Definitely, this would be continuing for the whole year. As you have seen in last year, we added about 235 odd crores rupees of capex, which is a new and some, say, all shutters last year. This year also, 6 months we have added, say, this almost 25 odd crore rupees of shuttering being added. So the shuttering usually depreciate faster, and that is the reason, because in the entire project, within 3 years duration, we usually depreciate all the entire shutters.
Okay, sir. That's all from my side, and thanks to all of you, and happy Diwali.
Yeah, thank you. But then again, I can just see that the depreciation and the interest cost is going to be almost in the similar line. Hardly there will be change of about 0.25% if you see last year to this year, at the end of this year. This time it has seen on the higher side.
Okay, sir. Thanks a lot. Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We'll take our next question from the line of Devang Shah from AC Mehta Investment Intermediated Limited. Please go ahead.
Hi, good afternoon, sir. Sir, I have 2 questions. First is, sir, what is your execution timeline for such kind of road project or the railway project? Because earlier in a Concall transcript, I have read that 24 months to 36 months. So whatever the order book you are comprising, both of road and railway or metro, just give us a segregation, sir. What is the execution timeline of all 3?
It is roughly the same. I think as you are also saying that 24 months is the minimum timeline for highway, or even for, if you see in Kanpur railway station, it is 36 months, RVNL railway project is 30 months, metro usually is 30 months, so water also is having 36 months, so just 2 to 3 years of time.
Okay, sir. And one more question, sir. We have seen in a recent quarter, in a standalone numbers, there is a decline in a PAT margin due to rise in our interest cost. So moving forward, so by considering the fact that you are also using the asset monetization of HAM project that you have mentioned, will it be margin is going to, further touch the earlier level that we have seen somewhere close to 8.6% or something? I'm talking about the PAT margin standalone basis.
Of course, I think PAT margin would be coming to the same range. This is because of you see the employee cost has been all-time high for the quarter. Because all the project being mobilized, but the execution was not that range. So this is one reason was that. But then again, finance costs and depreciation put together, we would be, by end of this year, finance cost would be in the same range as we were doing earlier. It was coming at about 1.4%. This year we will be in a range of 1.25% of the total turnover which we are going to execute.
Okay. So moving forward, you feel that it is going to improve from here on, PAT margin?
Yes, quite correct.
Okay, sir. Thank you.
Thank you.
Thank you. We have a next question from the line of Darshit from Robo Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah. Thanks for taking my question. So, I just wanted to know that do we see the previous, say, 18-19% of margins coming back anytime soon, probably in FY26-7?
You're talking about margins at the company level?
At the company level, yes.
Yeah, it would be almost in the similar range, 15.5-16%, as we are doing in last 4 quarters. We have delivered that margins, and we would be almost maintaining that discipline.
Okay, so for the medium term, we're going to maintain this. And
yes.
Some view, medium term view on order book and order inflow, if you can please.
Order inflow, definitely, as we have earlier discussed during the call that during the year we are expecting to add at least 5,000 to 6,000 crores of order, the highways and other sectors. And then the execution which we believe that we would be almost doing 20% plus from the last year.
Okay, but for the medium term, say FY26, 5, 6, 7.
Sure, I think for 26 and 27, with the government to focus on infrastructure, especially highway again in thrust, and we have seen all other sectors, their budget allocation has been all-time high in railways and most of the sector. So we believe that in everything, because of the election time, we are just keeping a caution that we may not have these many orders. But then 25 and 6. They are the years we believe that we would be adding at least 10 to 12,000 crores of orders for next year and beyond that in the next year.
Okay. Thank you so much.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We'll take a next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir. Sir, one question on the Ganga Expressways. Now, see, that was a very sizable sort of an order which came our way, and that helped us grow both the order book as well as the revenue profile. Now, going forward, as such a large project gets runs off from our revenue profile as well as order book, do we think that overall revenue growth etc. will taper down because we don't have any such large order either in pipeline or maybe expect to win in the coming years?
Your concern is very valid. So basically, with the recent project being executed where UER or Delhi, where about 8 kilometers of allocated portion being done, Gurgaon-Sona, it's almost similar to Gurgaon-Sona, with viaducts being constructed in Orissa projects, almost 8-9 kilometers. So this gives us the qualification and capacity to bid for further huge size projects like it's being called, if you see high-speed network corridors to be developed for railways, where the dedicated like bullet trains being developed. So in that, the range of projects are big size projects. We believe that we would be putting up a race to bid those projects, as a sole entity or as well as some JV. And that is only, I think, what you are saying, 4,500 crores of order. This cannot be from any, one single size project is a very high magnitude. We are looking into these sectors, and in tunnel also we are looking with some joint venture alliance. We are also looking into this sector.
Understood. And secondly, sir, on the order inflows till date for this year, now, of course, the NHAI ordering has been small, But we have been seeing at least the peers have been able to manage to get something, even in the last 7-8 months, while for us it has been almost negligible in terms of what we have been able to win in this 7-8 months. So how do you explain that sort of a market share loss in the orders win till date for this year vis-a-vis your peers?
Probably, we bidded a few projects, but the margins which we are expecting we should get were not there. So we have lost almost 7-8 projects, even for NHA awarded. But then again, there's not a very, many numbers of projects being bidded and awarded. So we are expecting this momentum or this tempo is going to be, right now November onwards, it's going to be all-time high. And as we have seen last 6 months, almost negligible. That we believe that we would be getting the same as we have guided, that we can have, say, 5,000 to 6,000 crores of order. And then again, as MSRDC RSQ has been, results have been delayed. That is again the potential is there with almost individual order size is about 1,700 crores individual project.
Understood, sir. And on depreciation and interest, so what I understood was that in the absolute amount, it will remain the same now. So as you scale your revenues in H2, your overall PAT margins would increase. But going forward, let's say in FY25, how do you see these two items moving? Because this quarter, in this half year, we have seen that these two line items below EBITDA has sort of hurt our P&L percentages. So for FY25, then from that base of end of FY24, how do you see them moving up?
The depreciation, we have added almost a very high capex last year, and this year also 128 crore, 30 crore rupees, and this is going to end up roughly around 150 with net of a capex rather. So what is the reason behind it was that 5 years, 6 years back when we added this, all machines, the technology of the machines being upgraded, taking out or phasing out the old machines and replenishing and getting new equipments with the BS6 and BS4 technology, and fuel efficiency is there. So this is one reason that you can see the all-time high depreciation going this time. But then again, 25-26, it would be all eased out to a normalcy. That in that range, the depreciation and interest put together would be in the range of 3.5%.
Understood, sir. And lastly, maybe I missed it, but FY24 you said around 54.
May I request you to join back the queue, please?
Yeah, just one last question. So FY24 you are saying 5,400 crore of revenue guidance, and FY25, sir, what is the guidance?
So roughly we are keeping our number about 6,200, 6,000 to 6,200.
Okay, sir. Thank you, and all the best.
Thank you. We have our next question from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. I think in terms of bid, you did mention on the railway where you are eyeing. So apart from that, is there any other sector in the known road side where we are bidding or any bids have been submitted?
In road sector, there are 6 bids which we already have done. There's a Chambal Expressway, which we already bidded, and one project also is there. I think that is in the state of Chhattisgarh, where the results are yet to be declared.
No, sir. What I was trying to understand is in roads definitely we are submitting bid, and railway again we have already shared the opportunity of roughly 8,000 odd crore. But apart from these two sectors, any other sector where we have bidded or we are eyeing an order inflow for us?
No, we are expecting that we will be bidding for metro, where we have already had qualified, with this recent completion of this project. So that is where I think we will be bidding, and we are looking into some tunnel opportunity in few, northeast, this state of Himachal and with BRO. So this is where we are looking into that.
Okay. And then when we say metro, it is over and above this 8,000 crore opportunity which you have mentioned, the railways. That's on top of it, right?
That probably we are looking for bids.
Okay. And sir, in a non-road side, when we are bidding, say a couple of projects that is there in order book also. So these are bidded on our own or they are in JV with any partner?
Which projects?
The non-road orders that we have in the order book, they are...
as on date, all the orders are with say sole entity. HG has already backed those orders without the JV. And in the future, I think as we are looking at some water projects where we are not qualifying, 100% not qualified into that. Even for tunnels, we are not qualified. So any for these big size projects of metro, even we are not qualified. So we would be looking into these opportunities where the joint venture alliance would be done.
Okay. Sure, sir. I'll come back in the queue. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take the next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Sir, just to again clarifying on the numbers. So in station redevelopment, you mentioned we have bidded 1,000 crore projects and plans to bid 3 more station redevelopment projects worth 1,200 crore.
Yeah, correct.
So the 1,000 crore we bidded 2 projects. Which are these railway stations?
One is Gorakhpur and one is in South.
Okay. And 14,600 crore also in initial remark we said, so that we are planning to bid on the 8,000 crore also the number that we are planning to bid. So that is 8,000 crore is a road sector where we are planning to bid. And what is this 14,600 crore? So that is including everything that we are planning to bid.
No, that's not included of anything. Highway I have not touched upon as a number. Highway definitely, as we were discussing upon, is 45,000 crores of highway bidding opportunity at MSRDC and 60-something thousand crores bidding opportunity at NHI. So this is what we are looking into to be bidded for say during the year.
Okay, and non-road we are further planning to bid for 8,000 odd crores.
Correct.
Okay. Got it. And on the working capital, sir, so core cash conversion days, we have seen actually it has reduced and 31 days came to the March level. So will it remain the same or it will further inch up?
No, I think as a net working capital cycle, it would remain almost 35 days, with say in between in the intermediate intervals. It always requires the working capital. Even you see the bank limits being used. Now again, it is coming to the same stable that 35 days ideally would be the range of working capital.
Okay, and when we will receive this monetization amount this November 3 for 3 projects, so in terms of the gain which will be booking, so one is how much the gain that we will be booking, and in terms of the tax treatment, how that will it be a 20% tax, capital gain tax kind of a thing, so how it will work out?
So we are working on it. Definitely it's not that big number because it's almost years when we started investing equity. So whatever gain is there are two kind of, we are one into SPV. So one is for equity invested by AG. So there are the two numbers, but that is not a very big say number.
Okay, so on standalone level, it will not be a major number.
Yeah.
Okay, thanks, sir.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
Yeah, thank you, Sana. Thank everyone for bringing their expertise and experience around the table. We appreciate everyone joining us today on the call and hope that we have addressed all your questions. If you have any further inquiries, please do not hesitate to reach out to our IR advisor, Go India Advisors. And thank you for your participation. Happy Diwali.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.